Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that dump on the Bitcoin chart. Guys, last episode I was saying that we did need to approach my critical level of the volatility pivot and hold that securely in order to keep pumping. We did not do that. So let me just go ahead and throw on some updates for you to see how do we turn this ship around if we were going to turn it around today. In order to do that, we would have to secure approximately 62,900, at which point we would probably say that we're finding a little bit strength in this area where you've seen pushes before, right? And of course, if we wanted to be secure in that, we'd need to hold 63,850, and where we would start adding momentum, where we might get that push up to the next level, would be if we were able to hold 64,100. Now, because of this just really bearish engulfing candle right here, just completely envelops the previous bullish candle that gave us a little bit of a hopium there, we can see that we are now pushing down into that bearish control zone underneath 60,700. In this region, we are considerably weaker than if we're able to recover and push out of the bear zone. So you just have to kind of watch out when you get in a bear zone. That's kind of a dicey area. You like to see these nice reactions, these nice reactions, these nice reactions, these nice reactions that push us to the upside. And so we want to see something like that, or we're probably going to end up just exploring the bear zone, and that could just take a little while to get ourselves out of. Now, what would happen if we did secure the volatility pivot by the end of the day and preferably add some momentum to that push to the upside? Well, maybe we could be taking a look at this mid-range high area over here, and where we would show strength is if we got above 68,630. A lot of the indicators are going to just show that strength in the move, and then of course if we want to secure the weekly or perhaps the 2-week volatility pivots, that's going to put us back in the daily bull zone. Bulls will be firmly in charge, and although we'll just barely have an upside bias on the weekly and the 2-week, that would be enough for me to say that we're likely to continue to the upside with some massive push. As for right now, again, we're just exploring that bear zone. If we do go ahead and just throw some key levels on that, you can see that these levels make a lot of sense if you consider our ranges, okay? Our ranges here. And if we do lose that bear zone in this, this approximately $61,000 area, to $59,000 area, then we could be exploring some of these mid zones in the next range lower. Now, how can we visualize that? Because, of course, nothing goes down in a straight line. Well, first, let's just have a concept of what we've been doing so far. And I just want to have a different spin than my previous episodes because, of course, there's multiple ways to look at a chart. You don't have to just say, oh, this is a bull flag or this is a blah, 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 right? You can always take a look at the patterns within the patterns. And here we see, of course, that we had this rising wedge. Everyone knew that price action was kind of rising. Because of this bit of a deviation here, maybe it wasn't super obvious that that was a rising wedge. There were a lot of people, as I mentioned a couple episodes ago, that were looking at this as a potential accumulation wedge. I was saying that was not validated yet because we had not flipped this area, and sure enough, that proved true, and we did have the pullback that I was warning against because this thing does look like it's a rising wedge, right? And so we did end up coming back to the downside, broke down. There's a couple of measured moves on a rising wedge that you might want to look out for. If we just take a conservative one, of course, the width of the majority of the price action here is going to just lead us perhaps down to 57,000. If we take the huge wave, including the deviation at the top and at the bottom, then of course, maybe if we take it just conservatively from the breakdown point here after it did a retest, then that could take us as low as 55K. Now, if I do just take it to the breakdown point, maybe 53K. So worst case, if this rising wedge is playing out, I'd be looking for that 55 to 53K area. And then best case, if this is, breaking down, well, we could show strength in our current area, but but probably more likely in that 57K area is where we would expect. Now, are there any other patterns that are coming out of this, once we reach that measured move? Well, we really have to play it by ear from there if we do end up taking out this liquidity point over here and just, start to find some strength. But right now, what I'm looking at is the potential for this rising wedge. And the interesting thing about the rising wedge is if you look at Bukowski's just the classic, five wave falling wedges, you can see that, oftentimes there is a deviation to the bottom, just like on those rising wedges. Sometimes you get these kind of deviations to the top. It's kind of hit or miss. It's not something that's perfect, but in a falling wedge, we very often see a deviation to the bottom side, which ends up being a fake out. And if you can recover the wedge, right? If you can recover the wedge, this is the point that you want to get in at, because oftentimes that recovery comes to explore the top of the wedge, and then you get the breakout, and sometimes you retest the wedge or something like that, and then off you go, right? Perhaps back to your local highs. So this is what I'd be looking for in an optimistic viewpoint. Should we have this breakdown to that kind of 55, 57K area, maybe just taking out this liquidity here around 59. So anywhere between 59 to maybe even that extreme of 53. As long as we held this area and then recovered the wedge, for me, in my mind, I would be looking towards this potential fifth wave here with maybe a little pullback, breakout in a pullback or something, and then hopefully just continuation of the bull market. Now, if we do back test this wedge and get rejected from it, that would be a pretty bad sign in my mind, guys. Let's just go ahead and throw on our levels again, and you can see that where that would take us. Should we get rejected from re-entry into our old range, again, we would probably be looking towards that 50K area next for our next possible big support using these blocks over here. Guys, I think I'm going to wrap it up there. There's nothing super obvious today. You just want to be aware of our key levels. And of course, we do need to recover 63,000 by the end of the day to even have the potential for a bias to the upside. And again, that's really not secure unless we take out 64K. So until then, just understand we are in the bear zone, and this might end up getting explored if we don't have a big reaction in the next day and a half or so. Okay. All right, Alpha Fam, that's your alpha for the day. Stay safe and happy trading.